Okay, guys, so I'm going to go to question 5. Question 4 is really a gap fill. You just have to literally fill the return, so I'm sure you can work through that. Question 5, I'm just going through it just because there were a couple of points that are relevant to something we did that there was some confusion over. But this is a good question because it clears it up for us. So the first thing here is is that we don't. So let's just go through these false. So these are some good fact checks. A limited. This is A limited should account for rental income in the period which is received. No. So in terms of income, we use the accrual system anyway. You know, this question of accruals, it's just income. When you recognize revenue, we don't say, oh, we'll wait until it's been received before we start recognizing it. No, you recognize it as accruals. So the answer is false. And then B limited should apportion capital purchase on a time basis. No, when you buy the thing, you just record the full cost. You know, so that's a ridiculous point. Now, this was the question we were discussing the other day in class, and it says C limited should apportion its bank interest on a time basis, and the answer is true. And I've actually used this question to confirm this knowledge, so you'll see why. We'll see why in a second. Right. Now, we know we're dealing with a company here. Companies can only do 12-month periods, right? Each of the companies, you can't have a chargeable accounting period greater than 12 months. We've discussed this a few times. Can't have one. Right, so what do we have now in this situation? So it says that these people have prepared a 16-month period ending on the 31st of January. So what you need to do is then sort of go back and ask yourself, okay, great. If you're preparing a set of accounts, if you're preparing a set of accounts on the ending on the 31st of January, right? You need to go back. You need to find out what the very first date was, right? Because it tells us that it is a. Let's just go back to the question here. It tells us it's a 16-month period ending on the 31st. So you need to go back and find out what the very first month of the 16-month period is. You literally need to just. I mean, it's just you going back. And I've gone back all the way, and I found out that it's the 1st of October. So the 1st of October. Let's just get the actual years down. Get that right. January 17. So you have here 17, and here we have here 15. Yes. So you have this all going all the way. So really the first period, if you like, is the 1st of October 15 all the way to the 30th of September 2016. Then you have the 1st of October again 2016 all the way to the 31st of January. So you have a 4-month period here, and you have a 12-month. How it works, right? So in answering that question, your answers are 1st of October 2015. Of course, you have the 1st of October 2016 to the 31st of January 2000. You have a short period, a 4-month period. We always start with a 12-month. You don't go like this way. You don't go, oh, I'll go this way and do a first 4 months. You have a first 12-month period, and then you have a 4-month period. Okay. Now, what we then have is this question here about which is why I was saying it's an important question. This 14-month period. So now we know that we have to do 12 months and 2 months. It says this people, they have a 14-month period ending on the 28th of February 2017. Now, what does that mean? So if we look at yes, let's just once again, let me just get a clean heat. So if we have a 14-month period ending on the 28th of February, it means that we have a first situation where we have the 1st of January to the 31st of December. Oh, a second. Sorry. Get rid of this. 1 second. Sorry. Here we are. So we have 1st of January to. Sorry. So we have the 1st of January to the 31st of December. And then we have the 1st of January again to the 28th of February. We have 2 periods, right? Well, this is a 12-month period, and this is a 2-month. So when companies cannot have more than a 12-month period. That's what we need to break up. So it means they have a 12-month period here and a 2-month period here. Now the year end, when I say the year end, it says it's 2017. Okay, great. So this is 2017. This is 1st of January 2017, and this is 2016, and this is 2016. So these are both periods. These are the periods we're interested in. Now let's go back to the question. So it says that the accounts for the 14. These are the full for the whole 14-month period. Show the amounts to be included for the chargeable. Show the amounts to be included for the computation of tax for the chargeable accounting period ending in the accounting period 28th of February 2017. So now look at this. The first period here, where are we? Here we are. Let's just come back here. So this period here, this one here, will be in the I think what you have to be really careful is the way the question is slightly phrased. It's slightly unhelpful, but it says show the amounts to be included in for the chargeable accounting period ended 28th of February. So the chargeable accounting period ended 28th of February. The chargeable accounting period is this period. See, because you see there are 2 accounting periods here. This first period here. Oh my goodness. Whoa, what happened there? Alright, sorry. This very first accounting period, I've lost my you have 2 periods here, right? There are 2 periods. There's a chargeable accounting period that ends on the 31st of December, and there's a chargeable accounting period that ends on the 28th of February. One is a 12-month period, and one is a 14-month period, right? So, just trying to get back a slide to write on, which might take forever now. We have 2 accounting periods, and they're interested in the 2-month period, right? That's what they're interested in. Sorry, I'm just trying to find my PowerPoint slide to load up. What we're interested in is the 2-month period, because that's what the question is asking. When you see this for companies, just because you see a chargeable accounting period, the key point here is a chargeable accounting period can be less than 12 months. Right? It doesn't have to be 12 months. What you have to ask yourself is, what is the chargeable accounting period? And the chargeable accounting period ending on the 28th of February 2017 is actually we can't have a 14-month period. It can only be 12 months or less. And we've already dealt with the 12 months, and that ended on the 31st of December. And then we now also have to deal with the 2-month period. So what we're really looking at is trading profits for the 2 months of that 14-month period. Right, while this loads, I'll just wait, and then I'll talk about the interest. With the interest, what we have to do is we have to calculate the total interest for the 14-month period and then just find 2 months of it, right? So we can't sort of say, well, this was in March, that will be in that period. This was in January, it'll be in that period. No, we have to work out the full interest for the whole period and then just take 2 months of it. So that's how they're doing it, right? So you can see that the interest here, bank interest here and bank interest here, those are full interests for the full 14-month period. So add those together for the 14 months and then divide by 14 just to find 2 months, because we're interested in the 2-month chargeable accounting period. But the gains just fall in as they are. So because the gains are operative events, if you like, they just happen. So we don't start apportioning the gains. The gains are they just happen when they happen. Too long, but it's almost there for us to do. Okay, while that's loading, okay, here we are. Well, it's still loading. Right, while that's loading, let's look at these very quickly. So here we have a company may have a chargeable accounting that exceeds 12 months. No, that's always going to be false. You can never have that. And a 10-month chargeable accounting period falls in the 2016 financial year. Now remember, the 2016 financial year for companies is from the, remember, companies are from the 1st of April to the 31st of March. So FA 2016 will be, let's just skip this up. So you can look at the tables, right, and just be very clear on what the financial years are for companies. Tax is very much rules based. You can't really, there's no guessing. You just have to look at the information and apply it. Yes. Almost there. Almost. Okay, I think here we are. Okay, so just coming back to this question of chargeable accounting periods. Chargeable accounting periods. The first period was from the 1st of 2016 to the 31st of December 2016, and they're asking us what's going on to the from 2016, 1st of January 2017. So this is 2 months, this is 12 months, and this makes the 14 months. This is what we're interested in. This is the chargeable accounting period they're interested in. So first of all, that means that this will be, if I'm looking for the trading profits, this will be 2 months out of 14 months times the trading profits for the 12-month period. And that's 94,010 times 94,010. So you need to find that. That's that. And like as I was saying, for the interest, 475 plus 568, that's what was received over the whole year. 475 plus 568 interest. 475 plus 568. This was what was received over 14 months. That's what we see over 14 months. So we need to divide that to find out what the interest is per month. And we need, again, just 2 months. And when you do that, you will get basically 2 over 14, 75 plus 568. When you do that, you will get, I think it's 149. So that's how to deal with that. And then, of course, the where are we? The capital gain happens. The capital gain, only the capital gain for in that period will apply. So the capital gain on the 1st of February will be in that bracket. So the 7568, the 7568 will be in this one. 7568 will be in this one, and the other one will be in, the other capital gain will be in this period. Okay, great. So that answers that question. Great. And so yes, please. So work through that. And that's a bit of a long question, but it's an important one. And revise again in that chapter. There's no way around it. You have to look at the chapter again and literally work through the questions in the kit, and work through the textbook again, if you like, just to go over understanding clearly about corporation tax. Companies dealing with 12-month periods, and then anything left over, and breaking up the profits, if you like, into those parts.